Market recap for October 2nd, 2018, Tuesday. If we look at the chart of the SPY, S&P proxy ETF, we can see that the market churned quite a bit today and ended up slightly negative, down about 0.06%. The Qs, again, same thing, churn near the peak of trading range since this new base developed starting in September. Closed down about 0.23, about a quarter for the day. The bigger story today is IWM, Russell 2000. Here we're showing an oversold signal on the right here, marked by the gray underline. If we look at what that means, RSI is now oversold. Stochastic is also oversold. The Russell 2000 has really taken a beating since September. The beginning of September. It's obviously not a good sign for markets in general. We do want to see small caps lead, showing that there is sufficient health remaining in this bull market. Looking at the image on the chart today is the smart money over dumb money confidence level, and what we're seeing is an extreme bullishness of dumb money over smart money. And this occurred around January 2018, right before the massive sell-off that we saw, about 10% in 10 days, quickest sell-off since 1929, the Great Depression. Not a good thing, and we'll just have to play it as buys. Looking at individual charts of the day, Boot Barn Holdings, retail stock, held well after bouncing off of the previous breakout area and the 50-day moving average. Today the stock held above the exponential 4-day moving average. EPS is growing at 400% year over year, 41% year over year in the last quarter. Revenue is also growing quite rapidly for a retailer at mid-teens, even though last quarter was only in single digits. Relative strength is at a 99, group strength is 82. Monitor this stock as we played this yesterday off of the stochastic oversold signal. Another one to take a look at is NEWR, New Relic software company. Here again we see that gray oversold signal, and that just indicates that RSI stochastics are both under pressure and there is high probability of this stock to bounce. What we do want to see is a close above the 4-day moving average, which is right around that 92 area, will be a healthy sign of a new uptrend. Again, an easy stop here is to use 1 to 2% below that 200-day moving average, which is currently around $86 per share. Another stock to look at, home improvement stock PGT Inc, PGTI. We don't see that gray oversold signal, but it is resting at the 200-day moving average. On a longer time frame, since it broke out in May 2017, it really hasn't looked back, and this is the sharpest sell-off since the uptrend started. Typically, the first bounce off of the 200-day moving average is a good sign for entry. Monitor this one here as well. You can either play it as a bounce off of the 200-day using tomorrow if it is a down day, or even just enter at the market open, use a couple percentages below the 200-day moving average as a stop. Now, a different name, Celgene, coming back from the dead, up a big 2.2% today as the markets churned and sold off into the close. This is not a leader like it was back in 2013 and 14. If we just look at a longer term chart, it had a massive run from end of 2012 to beginning of 2015 or mid 2015. Then it churned for building a big multi-year base for about 2 years, attempted a breakout in August 2017, breakout failed, then quickly got oversold, continued to be in a downtrend, stabilizing. Now it's trying to perk up above the 200-day moving average. large investors, institutional investors, and even more sophisticated investors look for that 200-day moving average to be sort of an indication of when a bull trend will start and when it is time to enter on a long position. So a breakout above the 200-day is obviously healthy here. It coincides with the 50-day crossing above the 200-day moving average. In the indexes, we call that a golden cross. Same thing in individual stocks. A golden cross is a good thing for markets and individual stocks. For the chartists, this does look like an inverse head and shoulder with a shoulder here, a head of about 4 months in duration with higher lows, and then another shoulder rounding out with a breakout point at about 95. These are all the long entries for today. Last one to take home is Arista Networks, ticker symbol ANET, broke below that 200-day moving average on yesterday, stayed below, made a lower low, lower high today, still trading below that 4-day moving average. The catch here is that this might be just a quick pullback play because the company has strong earnings growth, strong revenue growth, not something that we want to short. However, if the market really rolls over, as indicated by the IWM, which is highly possible at this point, this does warrant a short position. Again, keep your stops close, a couple percentages above the 200-day, or even for the more aggressive traders, the 50-day moving average, the blue line here at around 276, is a good way to play the stock on a short side and use it as a safe stop if the uptrend resumes. Looking on a longer term chart, hasn't really tested that 200-day moving average until July. Tested again in September, failed in October. Doesn't really mean much. Momentum is dying in this stock. Ever since it peaked in mid-February, it hasn't really made new highs. Attempted to break out in late October, but that failed quickly. Now the 200-day is gone. Overall, the market is in sideways mode. Not much to trade. Keep it safe, keep it close. As far as IPOs go, Billy not making much headway above the 1425, 1450 area, which is what we were looking for a breakout. Continue to monitor this one. IQ, Netflix equivalent in China. Again, the 50-day is strong resistance at this point. Once, twice, thrice, failed to capture the 50-day. Not a good sign. Look for a lower low at this point, maybe an undercut and rally at the $25 area. Lastly, hot stock of the year, Bitcoin of 2018, Tilray, TLRY, down about 16% today. Bounced off of that 100-day century mark a few days ago. Rallied 70%, down another 16%. To be honest, the train is long gone on this one. If you wanted to play this, the right time to do it was back in late August, or even another viable gap up on August 27th. But at this point, huge outside reversal. The good thing is volume is not as high as the up days if we look down below, and stochastics are getting oversold. Monitor for an entry at this point if it does become oversold, but keep your losses short, cut your losses quickly. That's it for today, October 2nd. We'll be back here tomorrow for more market daily review.